want to talk about some of the ways that you actually look at a real estate deal and what you got to look at to figure out essentially whether it's a good deal or not. So here's some of the things that I look at. Obviously, and this is a different conversation for another time. Number one, you want to make sure your numbers work. All right? What is the cap rate? What's your NOI? What's the cost of capital? Meaning, what do you have to pay your bank? And is your yield, your cap rate higher than that? That said, is there upside in terms of numbers? Can you charge more? Is it empty? Can you put in new tenants and charge more? Things like that. Do the numbers work? All right? That's number one. But what I really want to talk about is some of the things outside the spreadsheet. So number two, I would say you should look at is, and that's usually a good sign. There's a study that said if there's a Dunkin' Donuts or Starbucks in the vicinity, property prices go up. Now, one thing that the real estate market has shown us that Starbucks are some of the best at predicting the next booming neighborhoods. Whatever the hell algorithm or whatever the hell they got going on, there is basically foolproof. So, but a lot of times when they're there, it's kind of too late anyway. So, but you want to always look for, it goes into my point, you always want to look for retail, okay? Is there big name retailers in the area, whether it's Starbucks, whether it's, like I said, Dunkin' Donuts, Subway, even fast food joints like Burger King and McDonald's. Obviously, that's not going to be the same as if you see a Trader Joe's or Whole Foods, but does it have solid retail around? Because if the big name, the big box retailers are starting to come there, that's a good sign that it's actually something that's happening there, because they've made a bet, they're coming there, and usually it's like a domino effect. So you want to make sure that there's always retail in the area, supermarkets, stuff like that. Basically common sense. Same stuff you would look for if you look for an apartment, but some of that type of stuff is what people look at in terms of what drives the value of a property, what surrounds it. And the last thing I want to talk about is transportation. We're gonna make this short and sweet. Transportation. How close are you to, if you're not in the city center or close to downtown, which if you are, it's probably expensive as hell. But how close are you to transportation that takes you to the city center? Now, one of the investment theses about, back in the day, people, obviously the cream of the crop was Manhattan, right? Like it was in the city, as we call it in New York City, in Manhattan. Then it goes, okay, prices are booming there. People get priced out of there, so they start looking east towards Brooklyn, where people say, oh, Brooklyn is too rough. Then it sort of becomes gentrified, and it becomes hotter, and you keep going east and east, and before you know it, you're so far out, people start looking the other way to Jersey. But basically, anytime you're close to a subway station, to lesser degree buses, but mainly subway stations, whatever the major transit system of your city is, anytime you're within walking distance of that, you've got yourself something good. There's like, obviously, if you're less than 0.1 miles, you got yourself a winner. Anything short of half a mile is usually good. You know, the less the better. But once you get more than 0.5 miles, the walkability score drops. So does the desirability of that property, and therefore the value. Although there are ways that you can be creative, and this is something that we did with one project, which happened to be 0.9 miles from the subway. So it wasn't as desirable, and there's a big, can you call that one a skyscraper? I believe you can, like 6 skyscrapers at a project. One development with 6 tall buildings, and they have a shuttle, which to me was stupid. So if you can offer things like free Lyft rides or e-scooters or even the city bike, that can offset the hit that you would take in the walkability and therefore the drop in value. So that can offset that a little bit, but creativity aside, you always want to look at those 3 things. Of course, do the numbers work? 2, is there retail around? And 3, is it close to transportation so your tenants can get to and from very quickly and comfortably and all that good stuff. So just something I want to break down really quickly. Three things that I look at and you should look at whenever you look at a real estate deal. So again, it's not rocket science, it's pretty much common sense.